Welcome back. As we've been telling you, a lot of markets across Asia are still flashing red, barring a little bit of green in Hong Kong. Even Taiwan's turned negative now. So the Hang Seng is the only market that's holding out positive. Largely speaking, expecting a very cautious start. Let's pull up the GIFT Nifty and the implied open. It'll come for you on the screen. It has been several down days, and today the start again is likely to be down, perhaps breaking even that level of 23,500. Let's see how it goes after that. We've got, of course, our team standing by with the CNBC-TV18 list of stocks to watch. Lots on the radar. But first up, of course, we kick it off with TCS, Rima. So the numbers were slightly weaker than the poll you did, at least on the revenue, that is.
Yes, on the revenue, it's slightly subdued and lower than what we were anticipating, but margins were in line, the deal wins were strong, and the commentary was upbeat. So first on the top line, dollar revenues for the company declined on a quarter-on-quarter basis by 1.7%. They were flat on account, they were flat in constant currency terms on account of seasonality. There were client-specific issues which the company has been facing in Q2, and it extended into Q3 as well. And that's the reason why the revenues ex of India, which is largely the BSNL contract, declined. EBIT margins, though, on expected lines expanded by 40 basis points to 24.5%. But that said, there were some positives. One, deal wins, which were in a band of $8 to $9 billion, increased to $10.2 billion, up 26%. So that's positive number one. Secondly, the management commentary is also upbeat. They're talking about early signs of discretionary spending revival, not just in BFSI, but even in retail, and maybe becoming more broad-based as the year goes by, which is why they're a little more upbeat on CY25 versus CY24. CLSA today has upgraded the stock to an outperform. They say the valuation is now attractive, and they also anticipate the company's EPS growth to pick up. So over FY 17 to 25, TCS's EPS growth was approximately about 9.5%. Now they expect that to inch up to 14%. So most brokerages acknowledge that revenues were a bit of a miss, but I think the deal wins and the management commentary will provide some sort of a support to the stock.
Well, support and maybe a little bit more. We'll see. Let's talk about IREDA. Now, Abhishek is standing by with why that is in focus. Abhishek, morning.
Morning, Prashant. So Q3 results of IREDA has come out and it surprised negatively on asset quality, with gross NPA in absolute value increasing more than 30% on a sequential basis and net NPA in absolute value increasing almost 54% on a sequential basis. So gross NPA ratio has increased to 2.7 versus 2.2%. Net NPA ratio has increased to 1.5% versus 1% in the previous quarter. Our disbursements were strong, 5% on a YY basis and 67% sequentially. The tenure of the loans have increased. My disbursements to AUM ratio calculation shows that it's close to 59-60% level. So the AUM growth is very healthy at about 36.3% YOY and 6.8% sequentially. Spreads have jumped to 2.28% versus 2.12% in the previous quarter and about 2.05% in the same quarter last year. Net interest margin largely stable, 3.33% versus 3.34% in the previous quarter. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's go back to Rima. She's here to tell us about Tata Elxsi. Rima, rather weak showing out there.
Yes, a little disappointing. So the company's revenues were flat on a quarter-on-quarter basis. On a year-on-year basis, the revenue growth has decelerated to 2%, which is lower than the trajectory. The reason for the miss is transportation, which is about 40-45% of their revenues, was growing very fast, and that slowed down. So transportation revenue growth was just 0.5%, and the problem is weakness in the automotive industry in Europe. So the other two verticals are, bounced back a little bit, but not enough. So media and communication growth was about 0.4%. Healthcare and life sciences growth was 1.1%. On a quarter-on-quarter basis, we also saw the company's margins decline to 26.3% at the EBITDA level, and that drove a 13% decline in the company's profitability. Morgan Stanley says Q3 misses expectation, weakness in European transportation continues, and significant recovery in media and healthcare remains elusive. They've lowered their revenue forecast to 5% for FY25 to 9 and 9.1% in FY26. That, coupled with high valuations, could result in the stock continuing to underperform. So, it's a little bit of a weak showing for Tata Elxsi in Q3.
Okay, all right, got it. Rima, thanks very much. So we'll watch out for both of those tech stocks, TCS and, of course, Tata Elxsi as well. Adani Wilmar is on the radar. There could be a OFS today. Abhishek is back with us with the details. Abhishek.
Well, sources do tell CNBC-TV18 that, there is a launch of OFS for Adani Wilmar. The promoter entity, that is Adani Commodities LLP, will sell stake. So, floor price is set at 275 rupees per share, which is a discount of 15% to the current market price. So, the base issue size is about 4,825 crore, representing 13.5% of the outstanding equity. Oversubscription is about 2,323 crores, which represents about 6.5% of the outstanding equity. So the total offer size is about 7,148 crore, which represents about 20% of the total outstanding equity. The BRLM to the issue are SBI Cap, Jefferies, Antique, ICICI Sec and Nuvama Wealth. So expect the stock to be in red due to the high discount that you are seeing of 15%. Back to you.
All right, Abhishek, thank you very much for that. Well, L&T is the next one we want to focus on. Vivek is here with more. Vivek, morning.
Well, good morning. L&T is in the eye of a social media storm. This is on the back of the chairman, S.N. Subramanian's comments. Now, there's actually a video that's gone viral on various social media platforms indicating that he has made some comments, number one, regarding on work hours, calling for almost 90-hour week work hours, and along with that, also working on Sundays. On the back of that, there's been significant backlash that the company has faced on social media. So we reached out to the management of L&T. They gave us a comment largely stating that, nation building is at the core of L&T's mandate. And basically, they've gone ahead and backed the chairman's statement. While there is obviously no financial and material, implication as far as these statements are concerned, significant sentiments are being seen as far as L&T is concerned. So it will remain in focus. Yesterday, the stock did underperform. So it'll be interesting to see whether there's any stock reaction on the back of this particular development.
Very, very interesting. Rarely is it that a social media sort of controversy or social media issue makes it to our top 10 tally, but then it was that kind of a comment. Let's see. In terms of brand, it's been an untarnished, absolutely phenomenal brand out of India. It's first time it seems to be in the eye of a bit of a public storm. We'll see how it plays out. But Vivek, back to more news. PTC and NHPC. Why are you watching for these stocks?
Well, interesting development both on PTC as well as NHPC. Mint article reports that NHPC is eyeing acquisition of PTC India. This particular acquisition is mainly aimed at acquiring the power trading arm. So PTC India Financial Services, which is a listed entity and a subsidiary of PTC India, is not expected to be a part of this deal in case this particular deal fructifies. So reports indicate that the promoters are eyeing an exit, and talks are likely to intensify at a meeting scheduled on January 12th, and with the presence of the Union Power Ministry as well in this particular meeting. So looking at the current shareholding of PTC India, who are the promoters, NHPC, NTPC, Power Grid and Power Finance Corp, all of them hold a little over 4% stake, totaling to a little over 16% stake held by the promoters. It'll be an interesting development given the fact that NHPC already has significant presence in this particular area. And if NHPC does manage to get or this particular deal fructifies, it will be a significant acquisition as far as their own portfolio is concerned. Watch out for both of these stocks. We've reached out to the management of both NHPC as well as PTC India. We are awaiting a response from both of the managements.
Okay, that's a pretty interesting story and could be a huge deal in the power space, in the PSU space as well, if it plays out. Thank you for that. But quickly moving on, Mangalam's here. He's watching out for MGL and I think Adani Total Gas. Mangalam, what's the news?
That's right. So, yesterday during the markets, we got an update coming in from IGL saying that the domestic gas at APM prices for them have been increased. The allocation for them have been increased. And the street was hoping that this would come by for all the other players as well. And that's exactly what happened. So MGL as well as Adani Total Gas informed the exchanges post-market that for MGL, domestic gas at APM price, which is at a lower price, has been increased from 37% to 51% with effect from Jan 16. And Adani Total Gas as well has said that APM gas has been revised upwards for them in terms of allocation by 20%. Both these companies will stand to benefit from that, just as IGL had said that revision will have a positive impact on the profitability of this company. Remember, when these allocations were cut back in the day, there was a fair amount of derating for all these stocks. But now that this has been increased, the street may see some relief coming in for these gas stocks.
All right, Mangalam, thanks a lot for that. Well, I'm keeping an eye on SRF. Yesterday, SRF and Navin Fluorine were the two big gainers. Now, post-market hours, we had SRF that's come out with the clarification on the exchanges. And the reason the stocks went up was because, iGas, which is the US refrigerant gas distributor, had said that prices could move up by around 100-200% as well. But they've mentioned in their clarification that it's not necessary that the prices go up by as much. The reference that is being made is that to this statement that came in from iGas, they say that demand and supply is the ultimate reason that the prices will go up. And this geography that they have some kind of exposure depends on the demand-supply scenario out there. Various notes have come out post-market hours as well, and some believe that yesterday's move was an exaggerated one on the upside. So expecting the stock to be a little bit soft because of this clarification that's come about, and because, in fact, some of these sales notes have indicated that the price increase hasn't been as much as this 100-200%. It's been in the vicinity of around 5 to around 20% at least as of now.
Okay, all right. So that's the latest on SRF. Let's quickly recap the list of stocks that we need to watch today. The ones that have positive news flow around them are TCS, NHPC, PTC India, MGL and Adani Total Gas. Plenty of names with negative news flow around them as well. Tata Elxsi, Adani, Wilmar, L&T, IREDA and SRF. Okay, let's now look at the commodity cues that we're getting in this Friday morning as well. Manisha is joining in. Manisha, good morning to you. So what's the latest? The rise in Brent oil prices caught our attention as well. 77 now.
Oh, well, yes. We've been looking at higher highs when it comes to the crude oil prices. After 3% of decline in the previous week, the crude oil prices have gained up by 4.5% in this year until now, and it's just 10th of January right now. So, well, yes, very bullish cues coming in. There is fund allocations that we've seen happen in the crude oil prices also. And then the fundamentals have been stronger because the U.S. crude inventories have continued to decline. The cold weather demand has been higher. The Russian crude exports and the OPEC production also have seen a decline in the month of December. So all of that is finding its way into prices. It is a metal sector that you need to watch out for because while the precious metals have done well, the strength in US dollar index also has not deterred the kind of gains that we've seen in the base metal prices also. So overnight, whether it has been about copper, aluminum, zinc, we've seen gains coming in across. The best of the gains for this year until now have been in copper. The prices are trading at a 3-month high, and we've seen almost an 8% of gain come in for copper prices till time.
Okay, all right, Manisha, got that. Thanks very much for the cues. On that note, we'll take a very quick break. Come back on the other side. We'll have Siddharth Khemka, Head Retail Research at Motilal Oswal, joining in. We'll discuss some fundamental ideas and also some of those earnings reactions with him.